reported a very strong set of numbers in the quarter gone by. In fact, that's reflecting on the stock as well, which is trading nearly 13% higher right now. And for, to discuss what happened in the quarter gone by and what's the outlook going forward, we're now joined by Gauri Kirloskar, who's the MD at the company. Hi, Gauri. Thank you so much for joining us today. And, many congratulations. It's been another strong quarter for you. Revenues up 30%, profits up nearly 20% YOY. So tell us, what is driving this broad-based momentum for you?
So what we see is a pretty strong domestic demand. As we're all aware, India is a bright spot in the world when it comes to a fast-growing economy. And I think we are seeing the benefit of that, especially in our power gen business, which is driving most of the growth that you see this quarter. I believe also that the emission transition that happened in our industry is largely complete and stabilized. So it's business as usual, and we're seeing that uptick in demand happen. And it's driven by sectors such as infra, retail, realty, and actually all of the segments that we serve, including railways and defense as well. So all of our business units have performed exceptionally well this quarter, and we're seeing demand across the business units as well as across customer segments.
All right. Hi, Gauri. Morning. This is Shrishti also joining in. Your EBITDA margins, they are quite firm, despite that the input cost pressures were seen to be persisting. What helped you maintain the profitability? Was it pricing mix, improvement, or the efficiency gains that led to such steady number?
We've stated as a company before as well that some of our focus areas will be going towards high horsepower as well as exports and increasing our share of the aftermarket. These are the things in our industry that really drive profit. And over the last 3 years, quarter on quarter, we have seen a steady improvement in margins. And that's what you're seeing. So essentially, one is the CPCB4 plus pricing has stabilized in the market. And it's at a level which is comfortable for us. The second is that we have been seeing product mix changes as we move into the high horsepower space, where we're seeing stronger traction. A couple of years ago, we didn't really have products in this space. And now with the innovation that the team has been able to do, we have products in this space, and these are higher margin areas that we're getting into. We've also seen strong growth in exports this year, and that is also driving some of the margin expansion that you're seeing.
Right. Gauri, you were just talking about exports. They have seen a very good growth of about 23% this time around. So are you seeing sustainable global demand? And if you could give us some light on which specific geographies are you targeting? Which geography is going to drive the next leg of export growth for you?
So it's interesting for us on the international side. Actually, we get a lot of questions on how tariffs, etc., affecting us. But most of our international markets, we have negligible market shares. So a lot of the external factors that may be affecting other companies don't affect us yet, because I think our focus and what affects us is largely internal. So what we're seeing is we had this strategy of building out the right partners, the right products, the right channel structure in the markets that we wanted to focus in. And a lot of work has been done over the last 2 to 3 years on that. And that takes a lot of time. So what I believe we're seeing now in the growth is just the green shoots of that hard work sort of paying off. And we're seeing that growth happen now because we've put in the right structures in place in certain markets. Most of the growth that we've seen is largely actually driven by Middle East and North Africa, the MENA region. And that today is what is driving most of our growth. But of course, our focus areas have been Middle East, have been Africa, and the US as well.
All right, Gauri, we did discuss about the factors that are at play for you. But with this, help us with your view on the guidance. What's your revenue as well as margin guidance for the coming years? And where do you see the biggest opportunities emerging?
When we look at the macro economy and especially the global economy, like I said before, what really drives our demand today is the domestic economy, because our exports as a percentage of revenue are not that big. Also, even though we've seen that bit grow, we have seen exports grow, we have very small market shares in international markets. And so therefore, geopolitical shocks or we aren't really seeing the effect of those as a company. And so what we see is that the general domestic demand is what has been driving our growth, and we see this continuing at least for the next 6 months or so. In terms of revenue and margin guidance, as you know, we have set up a 5-year strategy, which we call 2B2B, which is to be $2 billion by 2030. It's a very aspirational target, but that's what we're working towards. So that's our revenue target. And on the margin side, even though we have been improving quarter on quarter, I do believe that with the product mix changes that we are aiming for, as well as the exports growth that we are aiming for, we do think that there's headroom on margins and we can improve there.
All right, thank you, Gauri, for sharing that outlook with us and the guidance for the second half of the fiscal. But on that note, we'll let you go. Thank you so much for joining us today. And once again, many congratulations